All right, so we're diving into the world of pizza and finance today.
Sounds delicious.
Yeah, you've been looking into Domino's stock, right?
Yeah.
It's kind of head-scratcher, isn't it?
Yeah, a little bit.
On one hand, you've got Warren Buffett
The Oracle of Omaha.
exactly snatching up like 1.3 million shares back in November.
Huge vote of confidence, you would think.
You'd think so, but then on the other hand, the stock is like hanging out near its 52-week low.
Yeah, that's not what you expect to see after a big buy like that.
Not at all. So is Domino's a hidden gem, or is there something else going on?
Good question.
But we're going to try to figure that out today.
All right.
We're digging into this Motley Fool article from January 23rd, 2025.
Okay.
It's titled, Trading Near Its 52-Week Low, Is Domino's Pizza Stock a Bargain Buy?
Catchy.
That's what we're here to find out.
All right, let's do it.
So the Buffett thing is really interesting, right?
Oh, yeah. I mean, the guy doesn't usually make impulsive moves.
Right. He's all about that long game.
Exactly. Long-term value.
And while Domino's stock hasn't exactly skyrocketed since he bought in,
It hasn't, no.
turns out he actually got those shares at a lower price than what it's trading at now.
Interesting. So he's already in the green.
Yeah, so maybe he sees potential that the rest of the market is missing.
Possibly. Or he's just really patient.
That too. But the article does make a good point about Domino's fundamentals.
Okay. Like what?
Steady growth, a business model that's pretty easy to grasp. Everyone gets pizza.
Right.
And then they've got those ambitious expansion plans, always opening new stores.
Yeah, they're not slowing down.
So on the surface, it does seem like a recipe for success.
It does, and that kind of fits with Buffett-style, doesn't
Yeah,
it?
totally. He loves those reliable, well-managed companies,
The ones that deliver consistent returns over time.
not chasing the next big fad,
Nope, slow and steady wins the race.
which might be what you're looking for in your portfolio, too.
Depends on your risk tolerance.
Exactly. But here's the catch.
Uh-oh.
The article also mentions that Domino's stock is trading at 26 times its earnings.
Oh, wow, that's pretty steep.
Yeah, especially considering their growth projections are in the single digits.
So you're paying a premium for that stability.
That's the question, aren't we?
And how does that compare to other fast food giants?
That's a good point. I mean,
Yeah.
Domino's PE ratio is even higher than some of the big players like McDonald's.
Interesting. So are we overpaying for pizza here?
That's what we're trying to figure out.
All right, well, a high PE ratio like that can be a signal that investors are expecting big things down the line.
Okay, so like they're betting on future growth being baked into the current price.
Exactly. But the key is whether that growth actually materializes.
Right, because the Motley Fool article highlights that Domino's is only projecting about 7% sales growth
Okay.
and 8% operating income growth over the next few years.
That's not bad.
No, it's not bad, but is it enough to justify that premium price tag?
That's the debate, isn't it?
It is. So maybe Domino's is more of a slow and steady investment than a high-growth rocket ship.
Could be. Could be.
It's something to think about.
Yeah, for sure.
So what do you think?
Well, it really depends on what you're looking for as an investor.
Right? Are you looking for those explosive gains, or are you more interested in a stable company that pays a decent dividend?
Because Domino's does offer a dividend,
They do. 1.4% yield.
which isn't huge.
No, but it's something.
It's something.
And the article's author, they're not exactly doing cartwheels over Domino's either.
Oh, really? What do they say?
They think there might be better opportunities for growth out there.
Okay, so they're not completely sold.
Not really. And they also point out that even though the stock is near its low, it could still drop further.
Oh, especially if the market takes a downturn.
Exactly. So buying near a low can be risky.
You could be getting a bargain, or you could be catching a falling knife.
Ouch. I like that analogy.
Timing is everything in the market.
It really is. So maybe it's worth keeping an eye on Domino's for a while.
Yeah, see if a better entry point emerges.
Patience. Patience.
Exactly.
All right. So where does that leave us?
Well, we've got Buffett buying in, but the stock's flat.
Fundamentals look good, but the price seems high.
And Domino's is a household name.
But is it a stock worth adding to your portfolio?
That's the question.
That is the question. I think we need to dig a little deeper into Domino's story.
Sounds like a plan.
See what else we can uncover.
All right, let's do it. You know, it's funny, right? Domino's is like everywhere you look.
Oh, yeah. Total household name.
Yeah, they've got that going for them. Solid track record.
Definitely.
And they're always trying new things, not just coasting.
Oh, yeah. Like all their tech stuff.
Right, the app, voice ordering, even those self-driving delivery cars.
I know. It's like they're straight out of the future,
Totally embracing it.
which is smart in the food delivery game.
Things are changing fast.
Yeah, they are.
Yeah.
But even with all that, there's still that disconnect.
Yeah, between the company's performance and the stock price.
So why isn't Wall Street more excited about Domino's?
Tough to say.
Is it just, I don't know, Maybe just pizza.
Like maybe not exciting enough for investors.
Yeah, like they're looking for something more, I don't know.
Cutting edge, more techy.
Yeah, maybe.
But remember, stock prices aren't always rational.
True, very true.
They're influenced by all sorts of things, market sentiment, what other companies are doing.
Oh, yeah, the whole economic climate, too.
Right, it's not always a direct reflection of how a company's actually performing.
So it's not just about how many pizzas they sell.
It's about how those sales numbers compare to what investors were expecting.
Expectations. Always about expectations.
Right, and maybe those expectations are a little too high right now.
Like the market wants faster growth, more disruption.
Something flashy, something to really shake things up.
But Domino's isn't some tiny pizza joint.
Oh no, they're global.
Yeah, huge international presence.
You'd think that'd be a major plus for investors.
You'd think so.
But going international can be tricky.
Oh, yeah. Different tastes, different rules, different economies.
As a whole layer of complexity and risk.
And we can't forget about competition.
Right. Domino's isn't the only pizza game in town.
Oh, no. You've got Pizza Hut, Papa John's, Little Caesars. They all want a piece of that pie.
Plus all the smaller chains and independent pizzerias popping up.
And some of them are doing really interesting things.
For sure. It's a crowded market out there.
Very crowded. And then you've got those third-party delivery apps.
Oh, yeah. Uber Eats, DoorDash, all taking a cut.
It's got to be tough on Domino's margins.
Yeah. Adds another layer of pressure.
So even though they're the big cheese, they still got to fight for every order.
It's a battle out there.
And with costs going up, ingredients, labor,
yeah,
you got to wonder.
Can they keep those profits rolling in?
Exactly. And that's something you have to think about as an investor.
Absolutely. Understanding the risks and the potential rewards.
Domino's has a lot going for it.
Yeah, they do.
But they also face some real challenges.
No doubt about it.
And that's why you got to do your own research.
Right. Don't just blindly follow the crowd.
Even if that crowd is following Warren Buffett.
Exactly. Look at the financials, their growth strategy, who they're up against.
Form your own opinion.
Exactly. Make an informed decision.
Like we said, Buffett's investment. It's a data point.
But it's not the whole story.
Not at all. We got to dig deeper.
Okay, so let's dig. What else are they doing to stay ahead of the game?
Well, one thing that stands out is their menu, always changing things up.
Yeah, new crusts, toppings, flavors.
Always experimenting, trying to appeal to everyone.
Right, not just sticking to the classics.
And they're branching out beyond pizza, too.
Like what?
Chicken wings, breadsticks, desserts, trying to be more than just pizza.
The one-stop shop for dinner.
Exactly. And they've been really pushing their loyalty program and promotions.
Got to keep those customers coming back.
For sure. But what about new stores? Are they still expanding?
They are, but they're being more strategic about it.
So
they're focusing on high-growth areas.
Success.
Both in the U.S. and internationally.
And trying different store formats, too.
Yeah, like smaller carry-out spots for people on the go.
So it's not just about opening as many stores as possible.
It's about being smart and efficient.
That makes sense. But here's something I've been wondering about.
What's that?
The labor shortage. It's hitting everyone in the restaurant industry.
Oh, yeah. It's a big problem for Domino's, too.
How are they dealing with it?
Well, they're trying to attract and keep workers.
Okay.
Higher wages, more flexible schedules, better benefits.
So they're trying.
They are, but it's tough out there.
It really is, and that's something investors need to think about.
Yeah, because labor costs are a big chunk of their expenses.
If those costs get out of control, it could hurt their bottom line.
It could, so Domino's has a plan.
But they're facing some serious headwinds.
No doubt.
So what does all this mean for someone trying to decide whether to buy Domino's stock?
That's the big question.
I guess it really comes down to this. Is Domino's stock a buy right now?
Yeah, that's the big question.
We see they've got the brand, they're everywhere, and they're not afraid to try new things.
True, but they've also got a ton of competition. Costs keep going up.
And that whole labor shortage thing isn't helping.
Nope, not at all.
Plus, we still have that question about their valuation.
Oh, yeah, that high PE ratio.
The investors are expecting a lot from them.
But can they really deliver? That's what we need to figure out.
So, should you buy Domino's stock or what?
Well, there's no easy answer, is there?
Not really. It depends on what you're looking for as an investor.
Right, what your goals are, how much risk you're comfortable with.
Exactly. So if you're looking for a company with a solid track record, a brand everyone knows, and a history of, rolling with the punches.
Domino's definitely checks a lot of boxes.
It does. But if you're after those massive growth numbers, there might be better options out there.
Possibly, yeah.
And even if you're a believer in Domino's long-term potential.
You gotta think about timing.
Oh, yeah. Buying near a 52-week low might seem like a steal.
But it's no guarantee that the stock will go up.
It could drop even further or just kind of sit there for a while.
Patience is key in the market.
It really is. Sometimes the best thing to do is just wait and see what happens.
Track their earnings, watch their strategy, see how they handle those challenges.
And don't forget about opportunity cost.
Ah, yes, the what could have been.
Exactly. Every dollar you put into Domino's is a dollar. You're not investing somewhere else.
So you got to ask yourself, are there other companies out there with more potential?
For the same level of risk?
Exactly. It's all about making informed decisions.
Ones that fit your financial goals.
And that means doing your research, weighing the pros and cons, and being okay with the risk.
Couldn't have said it better myself.
So I think the big takeaway here is that investing isn't about blindly following anyone.
Even if it's Warren Buffett.
Exactly. It's about making smart choices for you.
Well said. Well, we hope this deep dive into Domino's has been helpful.
Yeah, giving you some food for thought.
Maybe even made you a little hungry.
Hopefully for knowledge, and maybe a little pizza too.
Ha! That's a good one. Thanks for joining us on this deep dive.
Thanks for having me.
Until next time, happy investing, everyone.